G'day folks, welcome back to Pete's Investing. It's January 24, 2024. This is the Netflix technical analysis and economic outlook. So it's been some time since I've done an analysis on Netflix, but here, for those new to the channel, we do look at the weekly, the daily and the hourly charts. And predominantly on the for shares, I look at the weekly and daily, but I do look at the hourly as well, and I'll talk about that in a minute. First off, on the weekly, we look at the CCI 150, and this is our divergence indicator, and also down here we've got the ADX 25, which is our trend indicator. So you can see here first of all the trend when it breaks up, when the blue breaks above the pink, that shows us a bullish mode, and we only take long trades on the daily when the weekly is also bullish and the daily is bullish. But also back here, I just want to emphasize as well, the CCI 150, although it can be a trend indicator as well, you can see there's a bit of a bull run in those weeks there, most of 2023. As well as the trend indicator, we also use it as a divergence. So you can see here there was a bearish divergence between those highs on the CCI 150 versus the price, and it did fall off. Now what we do is we look at the closest Fibonacci range. If we draw a Fibonacci between that significant low there to that high, we pick basically the range where that divergence occurred, and we pick a 23 to 38% level as a minimum of where it's going to fall. Now of course in this case it's fallen well beyond 100% level, but you can see there, had you been going long in that during that period and you're noticing this divergence, you would have been wise to take your profits and get out of the trade. Now I do mark these with rectangles where there's a divergence. There was another bearish divergence there, the price fell off, and that would have been to that previous low as a Fibonacci range, and it's hit our target. It's actually gone to about the 50% level in that case, and it bounced again. Now the reason I choose the 23 to 38% level, because sometimes it actually bounces in that range and then it bounces from there and continues in an upward momentum. So just be aware of that. The lower you go in a Fibonacci range, the lower the probability of success, so just be mindful. So that's the weekly. We're in a bullish momentum at the moment, and there's no divergence to talk of. That divergence is probably already played out here on the weekly, and there's no divergence on the weekly. On the daily, same scenario. We're in a bullish momentum here, and because we're bullish on the weekly, we can take long trades. However, we always look out for these divergences. Now again, there was a bearish divergence back here. It fell off the 23% level, hit our target. You can see there it fluctuated in there for a while, but it went actually further down. In this case, I've also marked the support line here at 345 and a resistance at 503.50. Now you'll notice now more recently, in the recent days, we've also got a bearish divergence on the CCI versus pretty much a double top on the price. Now for this to fail, we need to see the CCI break higher than that entry point, in which case we'll see the price also break higher than this resistance, and that'll be a failure of a divergence. Now in terms of a price where it's expected to break to the downside at the lowest, so you can see there that 23 to 38% level, and if I was to draw a little rectangle in terms of a target range, that's our minimum target of a retrace. So it can fall further, but again, for this to fail, we need to see the CCI break higher than that point, in which case we'll see the price also break higher than this resistance, in which case the divergence has failed. But in this case so far, that's still in play, and if you're going long with Netflix at the moment, probably wise to take profits at the moment considering this. Of course, you can always get back into it when the conditions arise for your re-entry parameters. Now I also use the 1 hour chart. I do predominantly trade on the daily based on the weekly trend as well, but I also look at the hourly chart, because the hourly charts have a lot more divergence to consider. Now again, you can see here this happens to be similar to the daily, but the different time frames don't always align, and sometimes the hourly shows a divergence and the daily does not. In this case it does show a divergence. There was a bearish divergence here. You can see that it broke down. Remember what I said before, that 23 to 38% level is a minimum. In this case it hit the minimum target and then it bounced from there. So don't get too aggressive, don't get too greedy, and go for a 50% or lower Fibonacci range. Try and aim for that 23 to 38% level. Now again, more recent hours, you can see here that we have a bearish divergence. The price has made new highs, hitting this resistance, but you'll notice the CCI is still dropping. So I would ignore the ADX on the hourly time frame. In this case, I would look at primarily the CCI 150, and again, take heed if you are going long, have been going long in the last few days or hours, probably wise to take profits and get out of the trade. So that's where we are on that. And now I'll talk about some economic outlook as well. First off, we'll look at the key trends and developments. So from a subscriber growth, is a subscriber slowdown, with Netflix facing slowdown in subscriber compared to its meteoric rise in previous years. There's increased competition from the likes of Disney, HBO Max, Apple TV, and other areas there. Content strategy shift. Netflix is investing heavily in original content with a focus on global productions and diversifying its offerings beyond scripted content. There's advertising plans, announcing new ad-supported subscription tier as a potential revenue stream against subscriber growth challenges, and stock price volatility. Shares have experienced significant fluctuation in recent months, reflecting investor concerns about growth and prospects and market competition. In terms of current considerations, obviously the subscriber growth trajectory is important to look out for. Competition, we spoke about in terms of other content creators. Advertising revenue potential, success from an ad-supported tier could impact Netflix's financial model, and content quality and relevance. So again, just be mindful of some of these areas if you're looking at some fundamentals. This is just some of the data sources for further research should you be interested. So again, if you got value out of the video, hit that thumbs up, hit that subscribe and notification bell. Thanks for watching, and see you in a future video.